Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we are looking for a three-wave structure to the downside to finish wave 2 or B before then continuation to the upside in a wave 3 or a wave C. In this scenario, wave W counted a zigzag structure and then a 535 ending wave C at the 0.618, which is a rare target for C but a target nonetheless. In wave X, we are then looking for an expanding flat in an ABC, where the minimum target usually for a wave X is the 382, which has been hit. And also you want to see a finished 5-wave structure in this move to the upside, which looks to be finished already. So the invalidation of wave X then most likely is going to be this high over here, for now then a 3-wave structure to the downside. In the more bullish scenario, we are looking for a wave 1 or A and then a bigger 3-wave correction that is already finished. Wave 2 or B is in and we are now looking for a move to the upside, where if this is the low of wave 2 or B, the target for wave C is between 35.1k and 36.7k, and the minimum target usually for a wave 3 is 39.3k, which is an important target also on the high time frame and the macro. I do have a little bit of a problem with this scenario. It's not necessarily making the probabilities a lot less, but I do want to talk about it, and I have a couple of images to share as well. So if we look at this scenario over here, there's two ways to count this, in a WXY or an ABC. If we look at a WXY, we're looking at a 3-3 and then another 3-wave structure in this move to the downside. And it's mainly about this structure over here, because how do we count a very nice 3-wave move in this structure to the downside in a WXY? In a WXY, you can have many different corrective patterns in wave W or Y, but most commonly is a zigzag, a flat and a triangle. And the WXY inside a wave Y is usually a bit of a discussion. So if we look at the simple structures, well, can this be a zigzag in a 5-3-5? Yes, but then it would have ended over here preferably and not have another move like this. Or you have a 5-3 and then a 1-2-3-4-5 like this, but then you have overlap between the low of 1 and the high of 4, which would invalidate an impulse, but at the same time it can also not be a diagonal because it's then an expanding diagonal, which is rare in general. So that is actually quite difficult. So can we then look at a WXY-XZ inside this final wave Y? Now for a WXY-XZ, we're then looking for a sharp triple zigzag structure, which is very rare in general. WXY-XZ is very rare in general. But then you have a zigzag corrective structure, zigzag corrective structure, zigzag to the downside. But then again, it's very rare in general and therefore it's never preferred. And if we look at a wave C to the downside and then an AB expanding flat wave C, we're looking for a 1, 2, 3, 4, 5. But then again, there's overlap between the low of 1 and the high of wave 4, which usually invalidates an impulsive structure. So that doesn't make life easy for this scenario. And if we have a look at this picture over here, which I took from the book, you can see a little bit of my thumb still. This is the book of Frost and Prechter, the official Elliott Wave book, where it says a combination is composed of simpler types of corrections, including zigzags, flats, and triangles. And the combination is a WXY or a WXY-XZ. So we'd mainly be looking for zigzag, flats, and triangles. Now, if we go to one of the resources I have in the description, which I recommend you check out, which is the detailed one. I'm not an affiliate, it's just a great website to learn Elliott waves. They mention here at the top, they say, let me actually make this red. They say over here a double 3 can have the following combinations, and then you see zigzag, flat, X can have any corrective structure, and in Y it can be a flat, a zigzag, or it can be a triangle. Now it can only be a zigzag in Y if wave W is not a zigzag. That's also a rule. But then important note, and I recommend you read this for yourself, because it basically explains that nowadays in today's markets there's a little bit of a discussion going on if a WXY like 3-wave count towards the downside is allowed in a wave Y. So if this is a WXY, is it allowed to have a WXY inside a wave Y to the downside, because we live in different times compared to the book that was made a long time ago. Now the author over here is writing that personally I have so far not found any use by further complicating the potential of wave W, Y, and Z. In the contrary, I have found that it leads to overcounting corrections, misjudgment, all that stuff. So if you're starting out, just stay with the regular rules in W, Y, and Z, meaning a zigzag, a flat, or a triangle, which is very difficult to count in this structure and doesn't really help with the bullish scenario. But at the same time, there is the discussion for if it is possible. So we have to keep it in mind, right? I just wanted to share with this with you. So I hope you learned something here. Now in this scenario, in the more bearish scenario, we are looking for an ABC where wave B bounced in the most common target area for B very nicely, 1.236 to the 1.38, for then an impulsive structure to the upside where the most common target for wave C is between the two 1.618s, and you'll be able to count a 5-wave move on the micro time frames over here, where then the invalidation would be the high at the moment at 30k. If we then do go to the micro time frames and I jump to the 15-minute, then this over here is currently what I'm looking at. And also John in the group, he has a great Elliott Wave counter on the lower time frames. Shared this in the group over here, where he counts a 5-wave move to the upside in detail. As you can see, his count over here with then an extended wave 5 to the upside, so you can count clear waves to the upside over here, and then looking for like an ABC 535 to the downside for a wave 2, which is a zigzag and also most common in a wave 2 for the more bullish scenario. So in this scenario, which is the bullish scenario, we're looking then for a wave 1, a 3-wave in 2, and then continuation to the upside in a wave 3. Now in this scenario, what is important is that this wave 3 in blue over here on the Bybit and the Coinbase chart is the shortest impulsive wave of the 5 waves, which is officially not allowed. Wave 3 has to be either longer than wave 1 or longer than wave 5. Well, clearly it's shorter than wave 5, but it is actually also shorter on my chart as well as the Bybit chart. Futures, by the way, it is shorter than wave 1. On some other charts, however, like the chart from John, which is Binance, this wave 1 actually went past the 1-to-1 trend-based fib extension taken from the low to the high of 1 to the low of 2. And also on the index chart, Tim actually, and also in the group, shared with me that this candle went above the 1 fib. So it's a little bit of a discussion here at the moment, but in this scenario, this is currently the best way really to count this as an impulsive move. And honestly, it's actually quite difficult to count a 3-wave structure in this move to the upside. So preferably, we're then looking for a 1, 2, 3, 4, and then a 1, 2, 3, 4, 5 to the upside. Finish wave 5. Extended wave 5s usually carry the most volume, which you can see over here then. Most volume in this push to the upside, but what is also important is that we have a wave 4 and then another push to the upside on lower volume. That's exactly what we want to see in an impulsive structure. Then we look for an ABC to the downside, a 5-wave structure in wave A, for then a 1, 2, 3, 4, wave 5 to the downside, maybe one more low, but eventually you expect a 3-wave move to the upside for a wave B, before then another 5-wave move to the downside for wave C. And if we look for some additional confluences in this area, we do have a daily at 29,230, time naked point of control at 29,150, and the 786 is in a perfect confluence with the daily naked point of control of yesterday at 28,875. So these are some interesting levels to maybe put on your chart and keep an eye on. Now in this scenario, you look for a move to the upside, and preferably that is in confluence with some bullish CVD divergences. That would be very nice indeed. If you look at the more bearish scenario, well, we're basically looking for the same scenario. We have a 5-wave move to the upside, but now this is a wave C, right? And then an A, B, C expanding flat. And you're going to be looking for a move to the downside. So in this scenario, this is then a wave 1 instead of a wave A, followed by a 3-wave structure in a wave 2 instead of a wave B, and then you want to look for a wave 3 to the downside, and a wave 3 should be on much higher volume than a wave C and also more parabolic to the downside. So basically what I'm saying is that if price is going to move to the downside, because in both the bullish over here, the bullish scenario, we expect this to happen, but also in the bearish scenario, we also expect a move to the upside and then a move down, but then you expect it to continue down and not go back to the upside in the bullish scenario, right? So this move to the downside over here is going to be very important. Is it going to be very parabolic, high volume to the downside? Well, then the probabilities for this being a wave 3 and lower prices becomes higher. But if the volume is quite similar to this first structure to the downside that we have, as you can see the volume over here as well, and it's also more of a like lazy structure to the downside and not very parabolic to the downside, we can think of a wave C, especially if we can get some bullish CVDs as well for then more strength towards the upside. If we then look at the CVD divergences, we had a couple of bearish CVDs on the way down over here, but nothing drastic at the moment. The CVDs are pretty much neutralized on the lower time frames. There's not really any CVDs going on. I mean, if there's one, it might be the more bearish one. because over here price moving up, CVD moving up, but preferably with a high of a wave B or 2, you want to see CVD divergences with this high, so a lower high on price, a higher high on the CVD. There's no bullish CVD divergences at the moment, so that's pretty neutral. We do have news today, basically the whole day, and that is because of the Litecoin halving. So let's see if maybe we get some volatility. Also at 2:15, a little bit of news, but look at the red flags. They are mainly over here Thursday afternoon, Central East European time, as well as Friday. So those should be some nice volatile days. And then finally, if we go to the probabilities, I like to keep it simple over here because of also the confusion maybe on the medium time frame counts, right, for the bullish or the bearish scenario. So on the medium time frame, between the bearish scenario, another move down, and the bullish scenario, I like to say I'm neutral at the moment because of the discussion about a WXY. Now, I explained it's not very nice counting over here to count this as a finished structure, but nonetheless, for me, what is way more important at the moment than the medium time frame and also that one low time frame scenario I've shown you is the micro, because for me the micro right now is going to decide the direction, simple as that. So I don't really care too much about what's like preferred or higher probabilities or lower on medium time frame and low time frame. More important is the micro. And if we go to the micro, what I mentioned, it is more important what that move to the downside is going to do. So if we then move to the 50-minute, and I zoom out because now I have to look for my probabilities, there we go, then what is most important is that if we get a move to the upside and another move down, how is this move down going to react? What's it going to be, right? If we create eventually a bounce from here and we make a new high, the probabilities are increasing for bullish continuation for much higher prices. But if this moves down on high volume over here and support gets broken, then we're looking for lower levels. Simple as that. So the lower time frame or the micro at the moment is deciding what's going to happen. And I like to recommend to keep an eye on the CVD divergences locally over here. And if you don't know about CVD divergences, check out the end screen, because I like to thank you for watching now. Hopefully this was helpful, valuable to you. And as mentioned, check out this recent educational video, which is about CVD, for me, the best trading indicator you can use. I'd like to thank you for watching and subscribing, and I'd like to see you at the next one. Bye-bye.